Hi guys, Dan again, and now a quick video on the 2017 Fed budget that was announced last Tuesday, and also specifically what that means for property investors and house prices in Australia more generally. To kick off, negative gearing and the capital gains tax discount, both of which make property a more attractive asset class for investors. Neither of those two big ticket items have really been touched in any material kind of way, more just some tinkering around the edges. I see that as a good thing because ultimately what the government's trying to do is address some of these housing affordability issues that we're currently experiencing in Melbourne and Sydney, but doing so in such a way whereby we're not just going to crush house prices, which is not going to be helpful to anybody. So what the government's essentially done is they've taken a couple of constituents in the market, namely property investors and also foreign investors, and these are the constituents that have partly, not fully, but partly been responsible for the demand side of the equation and the effect that that's had on that price growth that we're trying to now moderate. So the government's just made the landscape slightly more challenging for these two constituents, just to take some of the heat off the market. And again, in terms of the issue that they're trying to address, you'd have to say that that is a sensible type of idea. So let's break it down. Firstly, with respect to property investors, no more are investors going to be able to claim the travel expenses that they previously could when traveling to investment properties that they own. Secondly, in terms of the items that property investors are allowed to depreciate, so these are the non-cash costs that they could previously claim to essentially reduce the after-tax running costs of their investments. It's more difficult now. Unless you've actually purchased those fixtures and fittings and items yourself, you can't depreciate them. So if it was the previous owner that bought them, then that's not your item to claim the benefits on any further. With respect to foreign buyers and non-residents in the market, the government's just kind of eased some of the tax breaks that those constituents previously received. So specifically with regards to their principal place of residence, there's always been this withholding tax where when their properties are sold, there's a 10% withholding tax that they're responsible for if the property was worth more than $2 million. Now what the government said is we're going to increase that to 12.5%, and it's going to apply on all properties that are worth $750,000 or more. So they've just reduced the threshold from which the tax kicks in. That's the big one. The second one is just around the vacant property tax. So there have been a lot of foreign buyers that have entered the market, bought properties and left them vacant. If you do that, you're now going to pay a tax. And lastly, the government's just said that for any property developers that have built developments whereby the majority of stock has been sold to foreign investors, can't do that anymore. There's a maximum cap of 50%. So all of those measures combined, just like we were talking about with property investors, make the asset class slightly less desirable for the foreign buyer, and hopefully that just takes some of the heat off the market and reduces the demand, which can moderate some of the price growth, which is what we're looking for. On the supply side, there's not a lot of stock in the market, and that's been another reason that explains why the price growth in Melbourne and Sydney has been the way it has. So to address some of the supply issues, the government's essentially introduced policy now which says it's going to be more incentivizing for the downsizers to sell up and buy new and less expensive principal place of residence. The reason it's more attractive now for them to do that is because the government's saying, take all the profits that you receive from selling that $2 million house in Glen Waverley that you bought in 1980 for $100,000, and we'll allow you to put $300,000 directly into super as a non-concessional contribution. You couldn't do that before. So essentially, the tax consequence of making that decision to sell is better, and Therefore, more people should theoretically be selling, and that just allows more stock to come onto the market and assist supply. Also means that younger families can access that stock, and that's another good outcome too. And then lastly, in terms of the first home buyers and addressing affordability in terms of them being able to more easily save for a deposit to buy the home, that's been one of the biggest challenges for first home buyers. And now the government's saying, instead of you having to take all of your after-tax savings and put that into a bank account to build up and grow, the government's saying, tell your employer to now essentially put some of your pre-tax earnings directly into super. And the government says you can do that, $15,000 per year per individual, up to a maximum of 30 grand. Okay, and that's going to essentially just make the savings concept easier and more attractive to young people. So with some of the modelling that the government's done, they suggest that it should be about 30%, you should be 30% better off by saving this way as opposed to that way prior to the budget announcement. So yeah, short of you having to, buy a less desirable property or having to buy in an interstate market and rent where you want to live, I actually think that's a good thing. But if you have your heart set on buying a bigger property in your local market, this could be an attractive savings measure that allows you to do that. And that's not so much addressing the house price growth issue, more the affordability concept, but it's still very impactful in terms of the announcement that has been made in this latest budget. Overall, nothing majorly controversial, but yeah, overall, I think quite a good budget in terms of addressing the issues in a sensible way, and I'll be interested to follow the outcomes in the months and years ahead. Any questions, feel free to give me a shout, and see you next time. Thanks.